What's up, everyone? Excited to give you this video today about Veritone, which is an AI company. For those that don't know, it's a little bit of a smaller cap company, but together with its subsidiaries, it provides artificial intelligence, computing solutions, and services in the United States and the UK. And this is basically just it enables users to transform unstructured data into structured data and analyze and optimize data to drive business processes and insights. So it's a pretty cool company. It serves media and entertainment along with government, legal, and compliance, as well as other vertical markets. But with that being said, let's jump into the video. I'm going to cover today, I'm going to cover the chart and give a price prediction. I'm going to go over some seasonality trends. I'm going to cover short interest. I'm going to go into the fundamentals and financials of the stock. So first off, with that being said, this is not financial advice, so please do your own research, but let's dive in. So in terms of recent price action, we've seen this $4.65 level act as resistance back in late June. Also, it acted as resistance in late May. And this is a pretty significant level because you can see that this level acted as support back in April, acted as support back in January, acted as support back in November of last year. This is a massively important level for the stock. And for me to really say that the technicals are bullish, we're going to need to see a move above this resistance level. And then also, we saw the 50-day moving average cross below the 200-day moving average in late, or actually, I should say mid-April, which is known as a death cross and implies bullish momentum. And we could see from that day on, shares have kind of slowly moved lower. So with that being said, we're below a major resistance level. Unfortunately, we have bearish momentum. We're under all daily moving averages, and which would unfortunately lead me to say that the technicals look pretty poor. But with that being said, really, you could say, this $3.55 level is a level where shares have found support in the past, and maybe a level again where shares sort of bottom here. And obviously, with all the AI hype, we've seen kind of this stock be left behind a bit. Just given shares were higher last year than they were right now. So if we likely come down to 350, I may add some shares, but honestly, I personally would like to wait until we get the daily moving averages to come down and we move above this resistance level at $4.68. Obviously, if you're a long-term shareholder, you can skip the technical section, right? It's not a huge deal to you. And I'll cover the long-term fundamentals in a second, but from a technical standpoint, I don't go and tell people what they want to hear with these videos. I just don't do that. I don't lie for views. So in this situation, the technicals do look poor, bearish momentum, and we're below major resistance. So for me to want to buy, I would need to get above this resistance level at 470, and I would also want to see a move above these daily moving averages as well, which would be about $6. So if we did get a move over $6, I would be a big buyer here on VERI. So with that being said, that's my price prediction for shares, is that we'd likely find some support around 350 and hopefully move higher. Do we find some support and burst lower? We could. It's really a tough one to call here, but all I can really say is that the technicals, unfortunately, are quite bearish at this point in time, though. That could change, right? If shares jump above $6, I would change my tune on the technicals for sure. But with that being said, let's take a look at some seasonality trends. So this shows me the average return for each month that the stock has traded, so in its 5-year history. So for example, in June, the stock typically rises 15%. Unfortunately, over the next 4 months, we see seasonality bearish trends, which kind of lines up with the stock's bearish technicals, which unfortunately points to lower share price. But obviously, fundamental news can change all that. But In July, on average, shares declined 17%. And then in August, August is typically the worst month for the stock in its history, as it typically declines 45%. So, that being said, let's take a peek at short interest. So 12% of the float is sold short, which is definitely a good amount. But in terms of a short squeeze, we aren't there yet, but these numbers aren't horrible. Um, Days to cover is 5.4, which basically means that it takes 5.4 days of average volume to cover the amount of shares that are sold short. So, you know, not a full short squeeze read here, as typically days to cover, we look for a ratio of about 10. So we're not seeing that here yet, but it's definitely not low. So about a medium, I'd give it like a C plus rating in terms of a potential short squeeze. So that being said, let's take a peek at the fundamentals. So this is Seeking Alpha here. They put these factor grades on valuation growth, profitability, revisions, all these factors, and put it relative to peers. So relative to peers, Seeking Alpha gives valuation a C plus. And when we take a peek at this grade, so yes, we're being given a C plus, but these individual numbers are pretty solid. Price to sales only at 1 times. That's well below the sector median of 2, which is very good. Price to book of 2.4 is pretty good for an AI stock. I would say that's kind of shocking for an AI stock, to be honest. For those that don't know, price to book basically means, in this example, the market cap is 2.4 times the value of the assets on the company's balance sheet. That could be property, equipment, those sort of things. And EV to sales is also pretty solid at 1, with the sector median being 3. The only negative here is that obviously the company doesn't make money, which is a big part of valuation, right? So I don't love that that they're not making money, but all the numbers that we do have, price to book, price to sales, all look pretty solid. And then when we take a look at revenue growth, it isn't great, but it is improving. So revenue growth year over year was 10% compared to the revenue growth which is projected for the next 12 months of 11%. So we're seeing an increase, and I do want to make this one point. We're seeing an increase as the sector median is projected to decline. So that's a good sign, right? That's some divergence from the general sector. So I do like to see that, although these aren't the knockout numbers you really expect from a massive growth AI company, right? So I still think we're early stages within the AI sector and industry. I just so we might see VERI be a little bit of a late bloomer in terms of growth, and definitely this divergence from the sector drop is a good sign that at least growth is intensifying. We're not going the wrong direction, although it is slightly. It's only about a 0.5% gain in terms of revenue growth, but it is notable when the sector median is dropping in terms of growth, and this company is, increasing growth. So I like to see that. I like to see their spending is increasing. So capital expenditure growth is year over year 231% growth compared to the sector median of 11%. And then let's take a look at some profitability margins. So this is probably the best number I've seen from the company, kind of as we go through everything here. So gross profit margin of 81%, nearly double the sector median. So really love to see that. And for those that don't know, gross profit margin, basically just revenue minus cost of goods sold. It tells you what you make when you sell something. So I'll give an example. If you sell, lemonade, you have a lemonade stand and you're selling lemonade for 29 cents, or excuse me, you're selling lemonade for $1 and you bought the lemonade for 29 cents. Well, you're making 81% on every single sale. But this doesn't tell you what you paid for the lemonade stand, right? What you're paying the person who's pouring the lemonade, what you're paying in taxes, what you're paying for permits, right? So there's other costs that are driving this company out of profitability, or excuse me, like out of being EPS profitable. but the gross profit margins look good. So this is kind of the saving grace of this company when I look through all the financials, is this gross profit margin is very good. So if we can see growth continue to intensify, this company does have a path to being EPS profitable, as you can see with the gross profit margin here. So I do love to see that. And then this is another great number. Honestly, profitability wise, this company, F this C minus grade. This grade should be better. So it has $3.80 of cash per share. This company trades at $4.04. So honestly, like that's kind of wild to me. Like you don't see much. So that's saying that of the market cap, 94% of it is in cash. So you're paying 6% for the equity. That's insane. That honestly gives me more confidence that 350 level will hold. Just because, I mean, you're basically just paying for the company's cash at that point. You're not even paying for their future revenue growth, which, as we went through, is intensifying. So, I mean, like, honestly, this profitability screen here is showing pretty good things. Obviously, net income margin, minus 18%, not looking great. And there are some other, numbers here that don't look pretty, but saving grace, like I said, this gross profit margin and the cash per share of $3.80 is an insane number. Trust me, I do a ton of company breakdowns on this channel, and I don't think I've gone through a breakdown over the past month where, over 90% of the market cap is in cash. I just haven't seen that. So, that definitely gives this company staying power. That gives this company, security, and you should feel very safe that this company isn't going to run out of money anytime soon. So, I mean, that's super bullish. I'm very happy to see those numbers for the company. And then let's take a peek at revisions. So unfortunately, over the past 3 months, it does seem as if Wall Street has become more and more bearish on the stock. So 4 different covering analysts have brought down their EPS expectations, and we see 5 different covering analysts brought down their revenue expectations. So for what it's worth, Wall Street is becoming more and more bearish on the stock. But to sum it all up, shares are coming down to support at $3.50. That level does look like it has, a likelihood of holding, given this is where we bottomed back in May. Short interest isn't, an A plus short squeeze, but I'd give it about a C plus. So that could happen. And valuation doesn't look great, but price to book looks solid, and EV to sales isn't horrible. The growth could be better, but at least we're moving in the right direction as the general market is moving in the wrong direction. So I think that divergence is important. And then really my favorite screen for the stock is the profitability numbers. 81% gross profit margin, $3.80, 94% of the market cap being in cash is an insane number. Don't just glance over that. That is amazing. So I think that is in itself almost a reason to own the stock. But with that being said, I hope you liked the video. And if you want me to do a company breakdown for a stock that you're interested in, please let me know. I actually did this breakdown at a request of one of my subscribers. So as long as you're subbed, and you can always ask me to do a company breakdown. If I have the time, I will definitely do it. So with that being said, I will end the video there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.